Good morning and welcome to this morning's Scottish buy-to-let market in 2025. What brokers need to know session and what timing for today's session. We've got lots to talk about today. If you haven't been to one of these events before, then the objectives are, as always with one of our digital events, is just to sort of understand what's going on in the industry, look at opportunities and challenges, look at products in the sector. This is sort of broad learning objectives, but we'll deep dive into certain things a bit more deeply today. We have got four speakers with us today. We've got Andrew Calder from Accord Mortgages, Donna Gentles from Legal & General, Holly Morrison from Paragon, and Alistair Ewing from the Lending Channel. And we've got a really good panel of people to talk about what is going on in the Scottish buy-to-let market at the moment. My name's Amy Loddington. I'm the comms director at Barcady Media here on behalf of Mortgage Advisor Event, and I will mention this again at the end. But if you want to hear more about what's going on in the Scottish mortgage market more broadly, we will be in Glasgow on the 20th of March, so please do come and join us. But before we get into the questions this morning, just a little bit of housekeeping. Please do keep your cameras and your mics switched off. It's distracting for the speakers. Otherwise, just keep them turned off. If you've got questions, if you hover your mouse over the bottom of the screen, there's a chat box. If you pop them in there, if it's for a specific speaker, just note it in your question so that we know who to ask. And if we've got time at the end, we'll get to those questions. Or if something interesting pops up, we'll get to those as we go through. And yeah, just engage in the session. And I hope you enjoy it. I'm going to turn off my slides now so they're not in the way of our speakers and start with the questions. Now, obviously yesterday there's a lot going on, so we have rejigged the questions a little bit to come to some of the biggest news first for the buy-to-let market, which is about the additional dwelling supplement. And originally the question here to our speakers was that it's been higher than in England and Wales for some time. Obviously, we've recently just announced that it's being increased in England, and we were going to ask, what can we learn about what's happened in the Scottish market to show what's going to happen in the English market? But then yesterday that changed. It's now been increased to 8% in Scotland. So actually, speakers, I'm going to come to you and say, what do you think that's going to do to buy-to-let in Scotland? And if we start with you first, Alistair, and then if anyone else wants to jump in after that, please do.
Well, I think we all expected something to come from the Scottish budget yesterday. There was talk about messing about with the NDR, the multiple dwellings relief. That doesn't seem to have been touched. However, I must admit I didn't see the hike in ADS from 6% to 8%. The 6% came in, I think, December 22, and that was a huge hike then for landlords. And I think since then, some landlords certainly have exited the market. The rise to 8%, I think that will be the final nail in the coffin for some landlords. Not for everyone, and maybe not even for many, but certainly some landlords, and even some transactions that might be in play just now. I spoke to a lawyer last night. He had a couple of cancellations last night because they couldn't get the missive concluded before today's date. Because again, the government has given us no time at all for clients to consider their position. So it's a bit of a disaster. Will it kill buy-to-let? I very much doubt it. But I think some people will definitely be cancelling and leaving the market.
Thank you. Holly? Oh, Andrew, go on.
Yeah, I was just going to say, I think, as Alistair said, in terms of what it means for buy-to-let in the future, I think, it's a challenge. I think we'll still continue. Obviously, the PRS is massively important as one of the tenures across our housing population in general. I think what's interesting for me is if you look at it from, I think the tagline that was in the budget, when it was actually published was, the reason that we're doing this is to protect opportunities for first-time buyers. Ultimately, landlords that look to purchase properties now are going to have to factor that additional cost into what that rental looks like on the output side. So it's kind of a self-defeating prophecy, perhaps, because ultimately, if that rent's higher, these individuals are not going to be able to save for a deposit to then become a first-time buyer. So I think, some of the logic behind it, I don't think particularly stacks up.
Mm-hmm. And I think I completely agree. And I think from what Alistair said as well, I just don't think any of us really saw this coming, because what was actually probably quite nice, I'll say this, but what was quite nice after the increase down in England from 3% to 5%, it almost felt we were on an even keel. And I think that maybe in Scotland, landlords maybe didn't feel quite as out of kilter. So we were all then able just hopefully, ideally, harmoniously go into 2025 and see what that market looked like. And this has massively kicked up the dust again. I think from what we see, I think that the landlords that are currently in the PRS in Scotland, I think they are experienced professionals and above all investors. So it's all a numbers game. So it is a case of really building this into their overall numbers and seeing if they'll work. And I think the concern is that, as Alistair said, more will leave. And actually, who does that affect? And it's the tenants. And we already have a housing emergency in 12 out of 32 of our local authorities. So what does that do if there's less rental properties available? If the prices do rise before the rent controls come in, I think it's the tenants that are worst affected. And as Andrew said, it was for first-time buyers. But the PRS is the second largest tenure across the UK, with 20% of all households being in the PRS. So if that dwindles, and if first-time buyers, we've obviously seen the government with the Help to Buy schemes in the past, and there's nothing like that coming out. So actually, what happens? I think we just have more of a crisis than ever before. So I think that's a concern that I see when I kind of look out onto the next little while.
Can I just jump in, Amy? Sorry, I think Holly and Andrew both correct. There's a huge disconnect now. I think the government's policy, I think originally when they brought the ADS in, it certainly hiked it to 6% a couple of years ago. It was to try and help first-time buyers access home ownership, but I've not seen any evidence of that happening. I mean,
No.
some of the lenders on panel may have seen. I've not seen that anywhere. Not all tenants are even aspirational home buyers anyway, but the people that I think are probably going to suffer most are the vulnerable tenants, maybe at the bottom of the food chain, and they're the ones that the government are trying to protect. And it's just such a flawed policy. I mean, again, and Holly was saying about the investors so your landlords, your professional landlords, they are investors, but they're in it to make money over the short and the long term. But if you're having to pay 8% at the beginning of a transaction and maybe a 3% and even up to 5 or 7% lender fees, there's a huge cost at the very start of the transaction. It takes a long time to recover that money. And some investors will be saying, I'll just stick it in the stock market, or I might just go for that crypto after all, because property is not working. So it is a potential game changer. But like I said earlier, I think buy to let for the professionals will still be there. It's a cost of transaction. It just makes it tougher for them.
Mm-hmm. And does anybody else think it was like, I was in a sales meeting all day. I was saying before we joined the call, I was in a sales meeting all day, so I was trying to keep across the budget as it was coming up, and I saw nothing. So I had sales meeting straight into our Christmas dinner. So I thought, oh great, I'll just be doing this call today as planned with all the information in my head. And it wasn't until, so it was really buried in terms of like on mainstream media, and it wasn't until you looked at the trade presses, the trade press articles coming out, that you were like, oh. So unless you were like tuned in and really paying attention, I think, it's definitely been easy to miss.
And the fact the budget started at 3 o'clock, and I don't know when the news was actually announced, it was certainly nearer 5 o'clock. So that's given, I did get one of our clients last week managed to get Mrs. concluded, saved them nearly £8.5 grand. That's because the 2 lawyers were available after hours, working together to rush through and get it done. But I think it was done almost on purpose, just because they knew that nobody or very few people would have time to get a missive rushed through last night after hours.
Goodness.
Yeah. Thank you. Donna, what about you? Have you got anything to add to that one?
So I think just really from an overall our lender partners side of things, I think effectively from there, obviously prior to yesterday, a lot of them were sort of feeding back that really round about the sort of 6% fee, that they hadn't really seen that actually had an impact really as expected on the market. But obviously now, as we're all saying this morning, with that increase, it might just be that little tipping point, isn't it, that we do see an uptick and not so many coming through. So yeah. For now, it seems positive, but we'll see what happens.
Yeah. Okay, thank you. And I guess, again, this is another question that we might see a difference now with this increase in ADS, but what have you been seeing trend-wise in terms of buy-to-let rental demand in Scotland in the last sort of 12 months or so? And I don't know who wants to come to that first. Donna, do you want to take that one first?
Yeah, I'm happy to do that one, Amy. Yep. So again, just across our lender partners, we've really seen, and we've touched on it earlier, around about the increase in the professionalism of the landlords, and also the sort of accidental landlords sort of moving out of the market as well, which I think perhaps is a positive thing. The sort of rental demand really remains very high around about Glasgow and Edinburgh, and that's across a number of our lenders. And obviously the student lets HMO is exceptionally high, obviously in the usual sort of university spots like Stirling and St Andrews. And Glasgow, we're really seeing a lot of building projects for student lets there as well. And there doesn't seem to be much sign of it sort of slowing down from there. And obviously within that is the rental yields being as high as they are, above 6%. That supports and contributes to that as well. Other good point, I think, again, across a number of lenders, we're seeing as the sort of tenancy length is stretching. So we're going from 6 months, which was the sort of norm over the last few years, going out to sort of 2 years on average from there as well. So a few positive things from there.
Interesting, thank you. Anyone else want to jump in on that, on rental demand?
I think and if you work it back to the pandemic, when the Scottish Government, again, Scottish Government meddling in things they don't know enough about, but they brought in the rent controls, and there's a white paper going through the government just now to see if you bring them in again, maybe permanently, but the temporary rent controls came in, and that led to no evictions, and it didn't, landlords couldn't increase their rents at that point. All that had, the effect that had in Scotland, particularly in the hotspots, as Donna said, like Glasgow, Edinburgh, student hotspots rather, the rent has gone up massively. The actual rent the tenants are paying. So you've now got another disconnect where the PRS sector, because of the demand is not meeting the supply, there's not enough properties. The properties that come on for let through, for example, Rightmove, I've got landlord clients telling me, certainly back in the summer, they could have let the properties, 40 times over because the demand was so strong. And that's got the effect of pushing the rents up. And the rent rises in Scotland at that time were the highest in the UK. And this was the part that had the rent controls. I mean, again, it's just madness.
Yeah, it had the opposite effect, essentially.
It did. Yeah, it did.
Yeah, I'd agree. I think it's unintended consequence, isn't it? That really that, as Amy mentioned earlier, the people that are kind of feeling the brunt of it are the tenants, and and to Alistair's point, it's the vulnerable tenants that all these policies are designed to protect that are going to be actually struggling, more in the long term. I think we've also seen that consolidation in terms of professionalisation of the PRS. As Holly mentioned, that exiting of the one or two property landlords or the accidental landlords. And I think what's interesting is it's been referenced a few times is that PRS property number demand and what's on the market and how often you could let it. There was a data subject freedom of information request that actually went to the Scottish Government about the number of landlords. And since 2019, we have actually lost 50,000 landlords, nearly 50,000, from 228,000 down to 179. So, ultimately, if that continues in that fashion, the demand's only just going to increase. And I think the other trend we've seen is, just to reference one of the slides earlier on in terms of product is, historically, things like top slicing were always seen as a southern proposition, for further down the UK, but actually, as a lender who plays in that market, we've certainly seen that move north in quite a big degree since certainly the end of 22 anyway, post trust budget.
And then just to add to a few points that sort of everybody's made on the call, from the student let side of things, City Let's actually had their report, I think it was out maybe last month, and they noted that they'd started to see a trend of students moving into their student rental properties, whether that was a HMO or otherwise, in the July, just to secure it in Scotland. So great news for landlords because they're getting rents much sooner than they usually do, which is fab. But I think it just shows how much of a bun fight essentially it is to try and get that property. And Property Mark also did a report recently that suggested there's about 10 applicants for every rental property, but I think that's an average. And I think if you did look at those hotspots like Edinburgh and Glasgow, and Alistair said 40 times over, I wouldn't actually be overly surprised at that. I think it is really, really tough. We're seeing as well some of the changes with the Renters' Rights Bill. Obviously, we had essentially a lot of those changes came in when the PRT came in 2017 for us. But it's actually interesting to note there are a few parts of the Renters' Rights Bill that are being pushed out to the devolved nations. So one of those is discrimination of tenants. So that that part about where people can say no kids, no DSS, and I think we also see a lot about home improvements and pets. So there are further changes, even though the Renters' Rights Bill isn't coming into Scotland. There are going to be further changes within that housing bill and beyond that landlords are going to have to take into account as well. You know, that maybe does affect their business plan, their strategy, and yeah, I think it's interesting as well. I think the data point. So Andrew noting, I've actually written that down, the Freedom of Information Act to try and get that information. As a national account manager looking after, you know, going on panel all across the UK, I've got data spilling out my ears that I get for down south. You know, I get invited to webinars where I can note down all these interesting trends. And I think the data for Scotland is like sorely lacking. And I think it is, I think as well, we've got now everything being pushed out to these 32 local authority areas who all report at different times in different ways. And I feel like it's like sand in your hand trying to understand what our PRS looks like, or even our housing, even to try and really understand like how much ex local authority or local authority properties we have. I think that would be an absolute minefield to try and pick apart and understand. So I think as lenders in these areas and brokers in this area, I think it is a huge uphill battle just to try and to sort of grasp the best understanding of it. Yeah.
Thanks, Holly. I wrote that down as well about the number of the freedom of information requests, because that's a staggering number, isn't it?
Mm-hmm.
Sorry, Alistair, I interrupted you there. Go on.
No, it's okay. I think from a macro point of view, so that all that data that the lenders that Andrew and Holly have access to is all really relevant, and hopefully we can get better data for Scotland, Holly. As a broker at the coalface, as many that are watching this today are, all we can say is that I think partly because the rental demand is so strong, as we said earlier, that's keeping landlords in general in the game. So like I said earlier, some landlords will leave now because 8% will be a cost that they're not prepared to pay. But I think because the demand is strong, it's still a good market. The PRS market is very strong. It's a good market for landlords, and there's money still to be made.
Yeah.
And certainly our numbers have, since 22, our numbers have stayed fairly steady. We thought at the end of 22, when it went to 6%, our buy-to-let numbers would drop in 23. They held steady. Not seen much growth, but they've held fairly steady, and they've held steady again this year. Next year is anyone's guess, but I like to think we're not going to be far away from where we are this year. But again, the lenders will probably know, again, from the UK wide what the stats are looking like. But I'm only reporting from our stuff as a broker, as I said, at the coalface. Our stuff's staying pretty strong, and there's still plenty of demand there because there is a premium rent, which, okay, interest rates are higher just now, but the cash flow margin is still strong for landlords.
And I think as well with these, like the housing emergency in certain local authority areas, I think that tells me, if I think about it, that actually capital growth in those areas are going to be really interesting to watch. So I think where Alistair said earlier that landlords ideally want to see short-term returns and the longer-term return, but actually if we look back on the progression of a buy-to-let landlord, actually previously it was always long-term. When you think about like pre-credit crunch, a lot of landlords were in the space for like their retirement. They weren't really necessarily in it at that point for that passive income. So I think that passive income is certainly not the case anymore. But I do think long-term returns on capital growth and our yields are still really strong. They are still the highest in the nation across the UK. So yeah, I think there is still definitely a reason for a lot of landlords to stick around. They're just maybe not happy quite at this point in time with the news we've had.
I wanted to go on.
So, no, one thing I was just going to add to Alistair's point there about, from a broker perspective, that there's still a lucrative market there despite the challenges for, potential future purchases. One of the things we've been talking about quite a lot in the the residential side of the market is the number of cessations and maturities that there are coming up next year in 2025. And I think the same applies for buy-to-let. I don't have Scotland specific data, but the buy-to-let market across the UK next year has got £44.3 billion of mortgage maturities that are waiting to happen. So if you look at it from that's from CACI as well, just for the source for that. But if you look at it from a Scottish perspective, I don't know what the percentage would be, but there's still going to be a lucrative opportunity there. And I think when costs are going up, when you've got all these regulatory changes and you've got the housing bill coming down the track and all the things that landlords are going to have to deal with there, it's really an opportunity as a broker to be more important than ever. To help landlords get the best bang for the buck and also be there to kind of guide them with all the stuff that we are talking about this morning. That I'm sure the professional guys will be all over this, but some of the guys that are maybe still the smaller one or two properties might not be quite as up to date.
Thanks, and that actually comes to a point that I was going to come to. It sort of ties in what you've just said and something Alistair said earlier about the rent controls. And I was going to ask about the potential reintroduction of rent control and what brokers need to consider in mind. But I think you make a good point that there's quite a few things that brokers need to consider. So what is it on a practical level? What do brokers need to be thinking about when they're advising their clients? And I'll come to you first on that one, Alistair, and then we'll come to you, Donna, as well on that.
I think the word advice is often tricky how you deliver that advice. Having the knowledge. So buy-to-let's clearly one of our core products, and specialist buy-to-let limited company. So large portfolios, limited company is our sort of space. So we spend a lot of time having our advisors here spend a lot of time having conversations with clients, because it's a lot more than just the transaction that's in play just now. For most of our landlord clients, a lot of them are looking to grow portfolios, and some of them still want to grow their portfolio. So it's having the knowledge that you can impart to them about the longer term plays, things such as understanding the legislation, what it means, the impact it might have to them in the future, things like rent controls. Obviously, we can't predict what's going to happen, but we can have a conversation about what's happened and what's happened elsewhere. I think Dublin and some other European cities have had rent controls in and didn't work, so they've binned them as far as I'm aware. So we can have these conversations that might happen in Scotland, but again, it's crystal ball stuff. All we can do as a broker is use information we have that's available, the factual information we have today, the stuff that might come down the track. It's our duty as a broker to advise the client what might happen. I mean, most landlords that are in at that level, professional landlords, most of them know their stuff anyway, but newer landlords to the market, the kind of younger entrants to the market, they're just starting that journey. They certainly need their handheld. I've got a client in play just now, a personal client of mine, young guy buying his first property. It's an unlimited company because he set it up because he wants to build a portfolio, and all of a sudden he's been hit with the extra 2%. So we had a conversation last night, and I said to him, you need to go back to your seller and try and renegotiate your sale price. And he says, well, I never even thought of that. So he's away back to the seller today to see it's going to cost him an extra roughly £3,000 and the extra 2%. So he's as well going back. And then if the landlord says yes and there's a deal, maybe they split it 50-50, but there's certainly, it's just helping them make the deal work for him, the buyer, and the seller as well.
Yeah, I would just agree exactly what Alistair's just said there as well. And I think really being aware of the legislation and really understanding like the intricacies of it as well is going to be really important. Obviously, as a mortgage club, we'll be absolutely working with brokers to ensure that we can support or help along the lines with that as well. And I think the affordability sort of conversations exactly as has been mentioned there as well is going to be really, really important now more than ever as well.
And Holly, what would you say about in terms of what lenders can do to help advisors working with buy-to-let? Is there anything that you can do to support advisors, or anything that you think advisors should know about when looking at all of the different things that might be changing in buy-to-let in Scotland?
Mm-hmm. So we're doing a lot of work at the minute with the Renters' Rights Bill that's coming in. So even just putting together presentations and stuff. So I think it's once we kind of really understand, I think something that I noted was, again, kind of going back to that data point. So which local authority areas is this coming into? And kind of everything in between. I think it would be great to be able to replicate that kind of educational piece. So we've got a great BDM for Scotland who's based in Solihull, so it's about being able to arm them with all of that information as well, with it being a bit of a potentially changing target. Obviously it's had the rental control stuff in the housing bill has had its first reading, and I think it'll go back and forth for a while. There's it needs to get assent, I think, next summer, and then there's a bedding in period, which we often see with any legislative changes. So it's about making sure that we can communicate that as best we can, educate our brokers, and also kind of just be on hand to sort of help guide them. But I think it's where brokers are obviously then helping their landlords, and especially if they're buying in certain areas, making sure they're aware of how this all might affect them in terms of how much they can increase their rents by, and everything around that.
Andrew, have you anything to add on that one?
Yeah, I think from my perspective, certainly at Accord, there's a couple of things that I think we need to do in order to, well, maybe three actually, so bear with me. So the first thing is, I think, as a lender, ultimately, one of the things you always hear loud and clear is we need to continue to adapt to try and help from a product perspective. And I think, buy-to-let is challenging. I mentioned top slicing earlier, but I think, there has been that diversification, certainly over the last number of years in the limited company market. It's one for us that we need to continue to explore. I think the key challenge, same as in the residential space, is affordability, since rates have, moved past that historically low environment. I think, our ICR's come down recently, but I think what's good and what's positive about looking ahead at buy-to-let affordability is that we are seeing a little bit of stability in terms of the economic outlook, and what that means for product pricing and swap rates. And I think that as long as we have that stability, we might start to see more change in ICR. One of the things that prevents lenders generally from taking action to reduce things like ICRs or stress rates and affordability is frankly just the concern that they would have to go and change it back again 2 weeks later if something changed. So I think the more stability we get, the better in terms of, from a lender product support wise. I think from an advisor perspective, one of the things that I'm very passionate about at Accord is our Growth Series product. I'm not sure if everyone's heard of that, but if you've not, I would encourage you to have a look. Essentially, it's a free resource which we offer to all mortgage advisors across the UK. It's not us punting Accord products in any way, which is nice. It's very much about helping advisors grow their own business and essentially navigate a changing landscape. And, there's a heap load of content on there. Actually, our most downloaded piece is the buy-to-let taxation guide, which ultimately, you can use to share that with customers and white label it as your own. Because, one of the challenges we always say is you don't try and be a tax advisor, because that's not what we're there to do from an advice perspective. So there's loads of stuff on there that I would say is of real good support, particularly for, as Alistair mentioned, those newer clients to the market. There's a lot of things you could be using there. And I think lastly, we're not the biggest lender in the world, but we're not the smallest either. I think we've got a part to play in terms of trying to use our voice to help support the private rental sector. We published a bit of research recently called Home Truths, which kind of looked at housing across all tenures. And one of the things that we did call for on there, and we have been lobbying with government for, is things like the introduction of mortgage rate relief. We talked about, particularly in the English space, certainty around EPC. Obviously, as part of the Scottish Housing Bill up here, there is a consultation on that as well, whether EPC is the right measure. But certainly the measures that have been proposed would essentially look like what you would have expected to get to an EPCC anyway. So I think, we've got a part to play there, because across the UK, landlords, they need to be, they need to cut some slack. I think that was a key takeaway from that report for us, was that, it's a critical part of the UK housing infrastructure, and everything that we've seen really introduced recently has been punitive. So I think ourselves, from that perspective, and other lenders will be doing the same, have a part to play there as well.
Perfect. Thank you very much. I'm going to make a point here, by the way, of saying we've got a couple of questions left. So if anyone in the audience has questions, now is the time to start getting those in. But yeah, we've looked at that. So I think there's some good advice for brokers there in terms of what's going on in the market. And we're going to move on now to looking at holiday lets. This is licensing introduced for holiday lets last year. Has that changed anything in the buy-to-let market? Has it changed the number of people looking to take on holiday lets, or people selling holiday lets? I think holiday. I'm getting confused now. Holly, if we come to you first on that one.
Holly does like a holiday, so I can see why you do get confused. Yeah, so as a lender who actually used to offer holiday lets, and sadly we don't we haven't for the last couple of years. I actually remember when we came out with the product and we just fell over, especially in Scotland actually. I did really, really well with holiday lets. And this was obviously all before the government went, oh, what's going on here? And there was a lot of headlines in the tabloids and in the media about antisocial behaviour, and it did obviously understandably affect a lot of residential owner occupiers, especially in areas like Morningside and different areas across Edinburgh and the main city centres across Scotland. So you can understand why the local government had to have a good look at it. But at the time when that came out, yeah, it was a great deal for landlords. They were able to get incredible yields, because you're able to charge, just especially in Edinburgh over the festival, you can charge what you like, or even places like St Andrews during the Open and different things like that. I've seen it kind of everywhere. But they have essentially brought in that you have to have a license. It can take up to 9 months to get approval for a license as well. And what I did find interesting was the fine for not having anything, like having gone through the appropriate steps. The fine for it is only about £2,500, so it's not massively punitive, considering they are really trying to put landlords off essentially, especially in those hotspots. But there's also areas like Edinburgh, and I think there's some areas in the Highlands as well where you need like additional planning permission. I believe in places like Glasgow, you cannot have a holiday let where it isn't main door access. So essentially, if it's not a house or a flat with a main door access, you wouldn't be able to get a holiday let. So once all of that started coming in, we noticed the demand for holiday let certainly reducing. And I believe I saw an article not too long ago that suggested that there was going to be further tax changes. And I wasn't too sure. Again, it's very difficult when you're reading these reports to know if it just affects England or if it's actually across the UK, that it looks like they were looking to change things like the capital gains tax for disposing of a holiday let, and also any capital improvements that you make, you're not able to offset as you were. So essentially, holiday lets are becoming more like a standard buy-to-let. However, going back to the yield, which will always remain incredibly high, I think that's often taken into account. So, like I say, sadly, Paragon don't offer holiday lets. It's something that we did try to look at, but I think it's just with the capital reserve that we need to keep back. It's just really difficult to be competitive, and if you're not doing a ton of it, it's just like it's not that it's a waste of resource, but it's just really difficult to then split the resource when you could be focusing on your bread and butter and getting all those lovely big limited company portfolios and that we're kind of wanting to focus on. But when I was a BDM in Scotland, I adored our holiday let proposition, so because we did so well with it. But yeah, I think holiday lets are certainly just becoming a lot more like a standard buy-to-let now.
Anyone else got anything on holiday lets? I'm kind of on a free-for-all here. If anyone's got anything they'd like to add to that, go for it.
No, I think for us from a broker's perspective, we do quite a bit of holiday let. When the legislation came in, when the Scottish Government's legislation came in, it was a definite game changer for a lot of landlords. But it was probably needed. Well, some degree of regulation was definitely needed because nobody wants to be living. If you're living in a nice family flat and you're next door to a party flat that's been used by Airbnb, that's really not conducive. That's not going to work. So I think the government have probably done some of the right things there. It's just how they deliver that control. And again, it's very fragmented because, as Holly said, some areas you need planning consent and a license, like Edinburgh and some of the Highland areas. Other areas it's only a license only. There's a different fee structure with every different council. So again, and there's different timescales. That the application could take 6 months, 9 months, and maybe longer, because it depends how well resourced the council that are doing that process actually are. So again, it's very fragmented across the country. But I think overall, operators that want to stay in the holiday let market properly. So I'm not talking about the people that own flats in Edinburgh, if we use Edinburgh as an example, because there was a load of landlords there. We had a lot of clients that had buy-to-let mortgages or even residential mortgages, renting their properties out over the festival in August and make a ton of money for that. And that's probably not a great part of the market for holiday let. But the proper holiday let operators were almost operating like a hotel, a serviced apartment. These are the people that we're helping in generally from a broker client perspective, the ones that are in the game for the long term, want to build a business, and it almost becomes then like a trading business rather than a sort of buy-to-let. So there are still some of our lenders on panel that will assess from an income perspective. As Holly said, the yields are much higher, but from an income perspective, some of the lenders that will do holiday lets will still assess it on the buy-to-let income as per the surveyor's report. Because then they're looking at those from the point of view, if it doesn't work out as a holiday let, will it lend itself to being a standard buy-to-let? So a lot of the holiday let mortgages are actually just buy-to-lets, really. But other lenders like the high street banks, like the Cumberland, for example, who are doing, I would say, true holiday lets, they're treating it more like a business loan or like a commercial mortgage almost, and treating it as a trading business. So they're looking at the income that the trading business brings in, and if it's an operator that's been trading for a while, they'll want to see accounts for that business, as you would in any commercial transaction, any commercial mortgage. And if they're a new operator, again, those lenders will require the property to be licensed before they draw down the funds. And if you're buying the property, and then that can almost be a deal breaker for some people, because how do you get your mortgage without the license? Almost chicken and egg there. But the banks will look at those from a projection-led perspective. So again, there's various portals that you can get projections. So it's a strong market and it's a good market, but it's a market really for the players that are in it properly, that are seeing it as a business, and not just for people that are looking to use a buy-to-let to get an improved yield on it.
Yeah, thank you. Donna or Andrew, have you got anything you'd like to add on either of those? It's fine if you don't, but if you got anything to add?
Nothing from me.
Andrew?
Yeah, I think the one thing I would add is it's not a market that we play in as a lender, so I don't have much insight into any trends or anything like that. But I think one thing that's worth just mentioning that lenders across the UK are going to be grappling with over the next 12 to 18 months, which is worth knowing about, is a piece of regulation called Basel 3.1, which as Holly mentioned there, is all about essentially the risk weighting which is applied to different product types and the impact it has on the capital requirements that a lender has to hold to provide each of those loans. I'm not going to try and be any more detailed than that because I certainly don't work for our treasury team and I'll end up getting it wrong. But essentially, the riskier the loan, the higher the capital. And it will all be dependent on how that risk is measured and weighted. It could impact certain different kinds of product availability and product pricing across the market. So it might be one just to keep an eye on in terms of holiday let. What that looks like for, maybe smaller institutions that, the capital could be more purposely deployed elsewhere. If it's going to become too much of a burden, it might be something that we see some small changes over the industry. But as I said, it's over the next 12 to 18 months that lenders are going to have to kind of really get to grips with that and respond to those sort of near final statements. So just want to keep an eye on.
Well, that leads us very nicely into the last question, which is about the next sort of 12 months to 18 months, which is not specifically just on holiday lets, but what do we think we'll see in buy-to-let, specifically Scottish buy-to-let? What do you think, where would you think we'll be in 12 months' time? What kind of differences do you think we'll see in the market? And I think we'll go for you, Donna, first on that one.
Yeah, no, it's been really positive, Amy. I think what we're seeing from our lender side of things, a lot that currently don't lend in Scotland for buy-to-let. We've had one lender in the last 6 months move in and start lending in Scotland, and we've got about 3 others that are currently working towards coming in as well. So obviously there is they see a demand there, and that has absolutely been the conversations that we're having. I think as well from quite a few of the industry events that we've been attending throughout this year, again, really positive for what we're sort of seeing and expecting going into next year, and sort of more of the same round about those hotspots certainly that we've mentioned earlier on in the call today as well. I think just one other thing just to kind of be aware of as well, there's a lot of property sort of forums and training academies obviously underway, which is where also they're professional or landlords are being guided, make sure they're sort of doing the right things, and creating sort of really high quality stock. So that again can only contribute to a positive side as well. So yeah, so from what we are seeing and hearing, it looks like a positive outlook for next year.
Thank you. Alistair, how about you?
But anyone that knows me, you'll know that I'm a glass half full or fully full kind of guy. So the next year's always going to be better than the year that's just gone. So we've already looking at pretty bullish plans for next across all products, not just buy to let. But I mean, bring that back to reality. As I said earlier, our last 3 years have held fairly steady when we thought we might have dipped in the buy to let market, and they've held strong. I think next year, well, the demand will be there. There'll be some landlords that will throw their toys at the pram or just say, no, it's enough for me. But as we've all said earlier, I think all the reasons that the demand is there, I think there will be strong demand in the coming year. And as Donna's just said, there's more lenders coming to Scotland, so they take a long time to do their research. They research the market. It can take them forever to actually start lending in Scotland. So if they're still looking to come into the Scottish market, that for me is a great sign that the market's in good shape.
Thank you very much. Holly, what about you?
Yeah, so I think Andrew touched on it earlier in terms of whilst I think purchases might be a little stilted next year for reasons already mentioned, we do have a great remortgage market to go for. So 37% of all fixed rates, not just over buy to let, but across the whole industry, are up for maturity next year. It's the first 2-year maturity after Liz Truss's mini budget. So I think we've moved on, thank goodness, a fair bit since then. And yeah, we are absolutely hoping that the bank base rate softens, swaps soften, ICR starts opening up, and that opportunity is there. I think something that you will see from a lot of lenders certainly in the next year, is a real focus on green and that EPC piece. So I think Labour had promised by the end of the year to give us a bit more of an idea of their plans, but from what we're aware, it's to be an EPC of C or better by 2030. We don't know if EPC is actually going to be the model, so that's all still very much up in the air. But really, regardless of what they come out with, you will see lenders with their own sustainability strategy. So our net zero strategy, for instance, is 2030. So as much as that covers our buildings and the cars that people drive and stuff, it's actually to do with our book, our property stock. So our book needs to be of a sustainable nature by then. So I think you'll notice lenders with a similar strategy needing to come out with, fit for purpose, retrofit options. And I think with that remortgage market that we've got and a potential EPC target for a lot of landlords, certainly, I think further advances are also going to be a great opportunity for us, as well as that remortgage piece. So yeah, I think it's still going to be very positive next year. Just a little bit tough on the purchase side for Scotland.
Thanks, Holly. Don't mind me, but I'm scribbling notes down as you're all speaking because there's lots of interesting things coming out of it. Right, Andrew, we'll come to you last on then. What do you think about the next 12 to 18 months?
I think I do call it the sentiment there in terms of, I think, despite some of the stuff that we've talked about, which is obvious challenges, the property market in general, and particularly PRS, is robust. People will adapt to changes, landlords will adapt to changes. I think the thing we need to keep an eye on is that Scottish Housing Bill. Obviously, there's been a step in the right direction in terms of, it was, originally we're just going to have rent caps of, we're looking at 0 for the first 5 years, and, now they've kind of landed on inflation plus 1, up to 6%. I think, for during tenancies, I think from a landlord's perspective, you can probably get on board with that. I think the bit that's still a real concern is between tenancies. For example, if you're a landlord with an existing let, as I mentioned earlier, we've got some brilliant landlords all up and down the country who are actually probably charging well less than what they should be. If you don't have the ability to change that, that's a real concern if you're trapped there. So I think that's something we need to keep an eye on. But I think, broadly, as I touched on, with that sort of with that macro environment stabilising, we'll see what happens, because the last few years have just been pretty nuts in terms of the things that have gone on around the world. Hopefully our own domestic economic environment maintains that stability, and essentially from a pricing perspective it becomes to be a little bit more favourable. I don't think it'll be drastic. I think we are in a new normal, but certainly every little helps.
Can I just jump in there as well, Amy?
Of course.
And I think obviously this is an education piece, this webinar today, and the other guys on the panel will probably have these numbers, but I get the impression there's a lot of brokers out there who'll do high volume residential transactions and probably don't do a lot of buy to let. They'll maybe just dabble in buy to let. Yes, there are buy to let specialists, they're a big part of their business, but I think brokers maybe need to be looking at their model and how they divert the ones that don't do much buy to let. I think need to get more educated. So seminars like this, lender events, get more educated. Don't be afraid of buy to let. We get quite a lot of, so about 2/3 of our business is introduced by brokers, all shapes and sizes. A lot of that stuff is complex stuff they just can't do, but quite a bit of that is simple buy to let. And I think we're getting it because the broker doesn't see the value in the deal, because the brokers might think, and again, this is my opinion, they might not think, well, I can't sell protection on a buy to let because it's tougher than on a resi case. I'm going to spend a lot of time because it's not familiar, so I'm going to spend more time. My fee structure is maybe too low, so they see it as low value and they pass it out, and we pick that kind of stuff up. I think the brokers got, the ones that don't do buy to let, got more educated. They would definitely find more opportunities, more referrals to come out of the buy to let. Because obviously, if you're, the buy to let client will need a residential mortgage, no doubt, as well, and they'll need protection. So I just think we need to open our eyes a bit more on the opportunity and not just say, I don't do buy to let, and just pass it on to somebody else. But I mean, we're certainly glad to take those deals. So if anyone's on here and gives us that business currently, I mean, please keep doing that.
Thanks. That is a good way to end it, I think. It's a potentially positive year ahead, and if you're not already in the know, get to know buy to let, and if not, speak to Alistair.
Speak to me. Yes.
Yeah, because it's not the most landlords don't have one property. As we know, they have, I think the average landlord has between 8 and 10 properties. So it isn't actually just the one deal that you're not making as much money on as a residential. There's like opportunity to do more and more deals.
Wise words. Very good point. Don't want to miss out on all that potential business. Have we got any questions from the audience? You've all been very quiet so far, which I always say is a good sign, because it means that you've all covered everything really comprehensively. But in case anyone's furiously typing in the chat box, I will give it a moment or two before we end.
Are we allowed to pick on anybody for a question? Can we ask? No,
you can pick on each other if you want. It could just turn into like a sort of a bit of an argument. That'd be great.
Well, there's people in the
if you've got
audience.
anything else you want to add.
Okay.
I don't think we've got any questions. Everyone's been very nice to you all. I was expecting people to start piling on you with loads of really intense questions, but no, you've been let off the hook, I think. This has been really valuable. It's been really useful. I've got a page full of very scribbled notes, and I'm hoping that the audience have got the same. And like I said at the beginning, and to echo what Alistair just said about learning about these things, we are in Glasgow on the 20th of March. We'll have plenty of sessions on what's going on in the market. I'm sure some of these topics will come up again, so please do come and join us. And I'm fairly sure some of the speakers might be there or in the area on that day. But otherwise, thank you very, very, very much to Andrew, Holly, Donna, and Alistair for joining us this morning. Thank you, everyone, everyone who jumped on the session as well. We will send you a recording of this so that you can look back over it. And in the meantime, have a lovely day, and hopefully we'll see you all soon. We'll see you all in Scotland. Thank you very much, everybody.
Thank you very much.
Cheers.
Bye.
Bye.
Bye.